2025 is shaping up to be one of the biggest years for stock market debuts we've seen in a long time. From AI infrastructure to design software and fintech, several companies are preparing to go public, and investors around the world are paying close attention. In this video, we'll break down the top 5 upcoming IPOs you should know about, why they matter, and the risks to keep in mind. Remember, this is not financial advice, just educational insight to help you stay informed. All right, let's jump in, starting with number 1, Verisure. If you live in the UK or the US, you might take home security for granted. But across much of Europe, owning an alarm system is common practice for both homes and businesses, and Verisure is the market-leading provider. So what does the company do? Verisure provides monitored security systems to homes, often including alarms, glass breakage sensors, motion detectors, surveillance cameras, and remote controls. They operate primarily in Italy, Spain, France, Germany, and the Netherlands. And in terms of numbers, Verisure has nearly 2 million customers, counting 80% of the Fortune 1000 companies in Spain, 50% in Italy, and 30% in France. Verisure is currently owned by BC Partners, a private equity firm, and it's preparing for what could be one of the biggest European IPOs since 2021. Initial estimates suggested a $2.5 billion listing, but sources recently pushed this up to $3.1 billion. What makes Verisure so interesting to investors? A couple of things. First, it's got a solid business model. As mentioned, the recurring revenue from subscriptions makes forecasting cash flows pretty easy. Second, it's got low competition. Much of the European security market is dominated by regional providers without the scale or resources to compete nationally. This allows Verisure to grow organically through word of mouth and referrals. Finally, there's the growth opportunity. While security systems are already prevalent in their target markets, Verisure is still able to cross-sell additional products to existing customers, helping boost average revenue per user. Then there's the chance to enter new markets. We know the company is considering expanding to the UK, a potentially lucrative move given the country's higher crime rate and property value. However, like any investment, there are risks to consider. Verisure relies heavily on 5 main markets: Italy, Spain, France, the Netherlands, and Germany. Any downturn in one of these countries could hit them hard. Plus, being backed by private equity, they face pressure to deliver strong returns for investors, which could lead to aggressive growth strategies or cost-cutting measures that may impact the business in the long term. To understand how well Verisure has been doing lately, you should definitely check out their latest earnings report. You can find more details in the description below. Number 2, CoreWeave. CoreWeave rents out GPUs and other compute resources to startups and companies building AI applications. They're one of the largest independent GPU infrastructure providers, straddling the line between hardware and software. Now, why is this company such a big deal? Well, CoreWeave is at the center of the AI revolution. Virtually every AI project needs specialized GPUs to train and run models, and CoreWeave is providing that infrastructure. Founded in 2019, CoreWeave has grown exponentially. Last year, they reported annual recurring revenue of $278 million, up from $113 million in 2022. Impressive stuff. The company's strength lies in a few key factors. First, they offer flexibility. Unlike hyperscalers like Amazon Web Services, CoreWeave focuses exclusively on AI workloads, allowing them to optimize their hardware and software. Second, they focus on cutting-edge tech. CoreWeave offers access to the latest generation of GPUs from NVIDIA and others, which are essential for staying competitive in the AI race. Third, they've got a solid customer base, including OpenAI, Stability AI, and Toyota Research. Now, like every promising startup, CoreWeave has its challenges. Firstly, they're highly dependent on a small number of major clients. 5 of their top 10 customers accounted for 54% of total revenue in 2023. Secondly, they burn cash. Scaling quickly requires massive investments in hardware and software, resulting in net losses of $242 million last year. Finally, the competition is fierce. Hyperscalers, cloud giants, and other startups are all vying for a slice of the AI infrastructure pie. CoreWeave needs to keep innovating to stay ahead. And guess what? CoreWeave has filed an S-1 registration statement for an IPO, indicating that they plan to list on the Nasdaq under the ticker symbol CRWV. However, they haven't provided any details yet. When you look at their funding rounds, the company seems well capitalized, so the IPO could come sooner rather than later. If you want to learn more about CoreWeave before the IPO, you can find a link to their recent funding deck in the description. Don't miss out on this one. Number 3. Canva. Canva is a design platform used by millions of individuals and businesses worldwide. Think of it as Microsoft Word on steroids. You can create presentations, posters, social media posts, and more. What's cool about Canva is its ease of use. Even someone with zero design skills can whip up something decent-looking in minutes. The company was founded in Australia in 2013 and today boasts over 100 million users, including 60 of the Fortune 100. And the company's financials are impressive. Canva reportedly pulls in over $1 billion annually and is profitable on an adjusted basis. Now, you might be wondering, how is Canva going public? Well, recently some of Canva's employees were allowed to sell their shares in a secondary offering, which gave us a peek into Canva's financials and valuation. At the time, the company had a valuation of around $42 billion. Canva's strength lies in 3 main areas. First, its massive user base. They serve everyone from individual creators to massive enterprises. Second, its profitability. Most design tools are free or freemium, but Canva has found a way to monetize their user base effectively. And third, the potential to expand deeper into the enterprise market. So what are the risks? For a startup, Canva's biggest challenge is likely valuation. Public markets have been brutal to overvalued tech stocks in recent years, so Canva will need to prove it deserves its premium price tag. Number 4. Wealthfront. Wealthfront is a robo-advisor catering to younger, tech-savvy investors. Instead of human advisors, Wealthfront uses algorithms to manage portfolios, offering a cheaper, more automated alternative to traditional wealth managers. Now, why does Wealthfront matter? 2 reasons. First, the rise of fintech. Younger generations prefer digital-first experiences, and fintech is delivering exactly that. Second, the comeback of fintech listings after a lull during the pandemic. Companies like Wise and PagSeguro are back in the spotlight, signaling a revival in investor interest. What's interesting about Wealthfront is its approach. It targets millennials and Gen Z, often overlooked by competitors who focus on high-net-worth individuals. Wealthfront's customer base represents the future of investing, and the company has built a strong brand with 6 million accounts and over $300 billion in assets under management. However, the fintech space is ultra-competitive. Giants like Vanguard, Fidelity, and Robinhood all want a piece of the pie. Margins are thin, and revenue can be heavily influenced by stock market performance. Still, Wealthfront's IPO could signal a new chapter for fintech listings in 2025. Here's what you need to know. Wealthfront recently filed a confidential S-1 form indicating its intent to go public. Once the official prospectus is released, you'll find a link to it in the description. And if you want to dig into their history, check out my previous videos. And number 5, Cerberus Systems. Cerebras is at the forefront of developing advanced AI chips. Their innovative wafer-scale engine architecture enables them to build the world's largest and most powerful processors. These chips are used in AI training, inference, and other demanding compute-intensive tasks. Now, why should you care about this IPO? Because AI chips are the backbone of the entire artificial intelligence revolution. Cerberus has developed a differentiated technology with unique advantages. And if successful, it could disrupt the current AI hardware landscape dominated by companies like NVIDIA and AMD. Now here's what sets Cerberus apart. First, their wafer-scale chips are bigger and better. By integrating multiple processing tiles into one chip, they reduce latency and increase throughput. Second, they're energy efficient. Cerberus claims their chips consume less power compared to alternatives. Third, they have a strong team. The company was founded by a group of former executives from Google Brain, and they've secured early adopters like Google Cloud, Microsoft, and Amazon Web Services. But there are challenges. Cerberus has received significant funding, but it's burning cash at a rapid pace. They've raised $665 million so far, but have yet to turn a profit. Additionally, the company faces regulatory scrutiny due to foreign investors, which is delaying the IPO process. Lastly, their customer base is concentrated. Over 50% of revenue comes from just two customers, Google Cloud and Microsoft. Now, when it comes to IPO timing, Cerberus initially filed their S-1 in 2024, but the process has been slow. Notably, the company's auditor, KPMG, resigned in August due to disagreements over accounting policies, further complicating matters. So, how can you keep track of this IPO? Look out for official announcements from the company. Usually, they'll publish an updated timeline or release a preliminary prospectus when things progress. In the meantime, you can read their original S-1 filing for insights into their history and operations. Just keep in mind that as of July, their financials and projections may be outdated. That's a wrap on the top 5 IPOs you should watch in 2025. Remember, stay curious, keep learning, and always do your own research before making any investment decisions. Thanks for joining me on this journey through the world of finance and investing. If you enjoyed this video, don't forget to give it a thumbs up and subscribe for more insightful content. And if you have any questions or comments, drop them below. Until next time, happy investing.